What is your credit score? Is it above 750? And do you see that as an achievement? Then this video is exactly for you, because today I'm going to prove something to you. A high credit score does not mean you have won the game. It means the system has you exactly where it wants you. The credit score system was not designed to measure your financial health. It was designed to maximize the profits of banks and credit companies. And today I'm going to prove that to you step by step, with numbers, with real data. By the time you finish watching this video, your entire perspective on the credit system will have changed, and most importantly, you will learn how to use this system in your favor. And yes, I promised a 401k video last time. That video is coming, I promise. But first I need to tell you something far more important, because investing without this knowledge is like pouring water into a leaking bucket. Let us fix the bucket first. Now let us begin, and let me ask you this. Do you actually know how your credit score is calculated? Most people say payment history matters and stop right there, but they never go inside the system. Today we are going inside, and what you see is going to surprise you. I'm telling you that right now. Write the answer to this question in the comments. Do you know what your credit score is if you do write it? If you do not, write that too, because the answer you give to this question is going to carry a completely different meaning by the end of this video. Now imagine a scene. You woke up this morning, you opened your phone, and an ad appeared in front of you. It says, "We approve your loan instantly with our special offer, low interest, flexible payments." Have you seen this ad before? Of course you have, because these ads do not appear in front of you by accident.
This is the
Algorithms
algorithm
are watching
optimizing
you.
financial
They know what you
yields.
search for.
The integration
They know
of the
when you are
mechanical
vulnerable,
systems
and they
is
show up
driving
at
this
exactly
surge in the
that
market
moment.
indicators.
Social media platforms sell user data for ad targeting, and credit companies use this data to reach you at your weakest moment. This is not coincidence. This is engineering. In 1956, two mathematicians named Bill Fair and Earl Isaac founded a company. That company was called Fair-Isaac Corporation. Today we know it as FICO. And here is the first unspoken truth. FICO is not a government institution. It is a private company. And this company does not share the full formula of its algorithm with the public. Think about that for a moment. You do not have full information about the system that evaluates you. This is a black box, and without knowing what is inside that box, you are making every major financial decision based on it, when buying a home, when renting a car, even when applying for a job. Yes, you heard that right. Some employers look at your credit score, and this is completely legal. Now, like this video, because what I just said is something most finance channels do not say, and the like button is the most powerful tool for getting this information to more people. Your FICO score is made up of 5 categories, and inside each one there is a trap. I am going to break them all down one by one. But first, let us look at the overall picture. Payment history, 35%. Credit utilization rate, 30%. Length of credit history, 15%. New credit applications, 10%. Credit mix, 10%. Sounds reasonable, right? But now as we go inside each one, that logic starts to fall apart. Let us start with payment history. This is the biggest slice at 35%. If you make payments on time, your score goes up. That seems fair. But here is what they never told you. If you are even 30 days late on a single payment, your FICO score can drop between 10 and 100 points, and that drop stays on your credit report for 7 years. 7 years. One mistake. 7 years of consequences. And during that time, banks can charge you higher interest rates because you are now labeled as risky, and the people who put that label on you never once warned you that things can go wrong. Now I want to ask you something, and I want you to write your answer in the comments. Have you ever been late on a payment, and did you realize the long-term impact of that? Share your experiences, because this community learns from each other, and your story could guide the thousands of people watching this video. Let us move on to credit utilization rate. And this is the most critical point that most people have never heard of. Credit utilization rate shows how much of your card's limit you are using. For example, if you have a $10,000 limit and you have spent $3,000, your rate is 30%. FICO recommends keeping this rate below 30%, but it does not tell you that. You have to find it out by researching. And here is where the real trap begins. Do you remember that notification, the one that said your limit increase has been approved? Congratulations. They presented it as a favor. They called it an exclusive customer privilege, but what did they actually do? By increasing your limit, they made it easier for you to spend more, and at the same time, they helped you keep your utilization rate low. And it did not stop there. Right after that limit increase, an ad appeared on your phone saying, "The best products of the new season with installment options." This is not coincidence, this is coordination. The credit company increased your limit, the bank sold your data to the ad network, and the ad network caught you at exactly the right moment. They gave with a spoon and took back with a bucket, and they did all of this completely legally. This is not a contradiction, this is a design. And who benefits from this design is now a question with a very clear answer. Let us move on to the length of credit history, and here you will see the most insidious side of the system. The longer you have been using credit, the higher your score. That sounds logical, but here is what it actually means. If you are young, if you just started a new job, or if you just arrived in the country, the system considers you unreliable. Someone who just came to America, found a good job, earns a regular salary, can be rejected when they try to rent an apartment because they have no credit history. But the same system gives a high score to someone who has been using credit cards for decades and is drowning in debt, making only minimum payments. Now stop here and think about this. This system is not just exploiting you, it is also shaping your children's future. A parent who is trapped in a debt cycle today cannot teach their child financial literacy tomorrow because they themselves do not know how this system works. The system knows this and does not care because every new generation means a new customer. Every new customer means new interest income. And as long as this cycle is not broken, the system keeps winning. Now share this video with everyone around you who uses credit cards, who is thinking about buying a home, or who wants to leave their children a better financial future because this information can change a generation, and that is not an exaggeration. Let us move on to new credit applications. And this is the part that surprises viewers the most. When you apply for a loan at a bank, the bank makes a hard inquiry on your credit report, and this inquiry lowers your score. So when you apply to multiple banks looking for a better interest rate, which is a completely logical and smart consumer behavior, every single application pulls your score down. According to the system, someone who researches, compares, and looks for a better option is a risky borrower, but someone who accepts the first offer without questioning anything is considered trustworthy. And at this point, what do banks do? They send you special interest rate offers. They say valid today only. They say apply now for this offer, and the moment you apply, a hard inquiry happens and your score drops. They created urgency, they got you to act, and they lowered your score. 3 steps, completely legal. This is not a paradox, this is engineering. When it comes to credit mix, the system tells you this. Having only a credit card is not enough. You need a mortgage too, a car loan too, installment purchases too. So according to the system, the perfect consumer is someone with multiple types of debt. And here is where social media plays its role. The dream home ads you see on Instagram, the zero-down car campaign videos that pop up on YouTube, all of these are contents designed to tie you to the system with more types of debt. Algorithms know which content will move you to action. They are fed with behavioral data, and they bring you face-to-face with exactly the right product at exactly the right moment. Now take a step back and ask this. Who is this system designed to benefit, you or the institutions lending you money? Write the answer in the comments because that answer is the heart of this video, and I genuinely want to hear your perspective. Now let us look at the big picture, and the numbers are striking. Approximately 45 million people in America have no credit score or a low score. These people buy homes at higher interest rates, pay more expensive car insurance. Some of them get rejected in job applications. According to Consumer Financial Protection Bureau data, someone with a low credit score can pay $100,000 more in interest on a 30-year mortgage compared to someone with a high score, $100,000. And where does that $100,000 go? Into the profit column of banks. Now think about this through a generational lens too. If a parent paid that $100,000 in excess interest, the wealth they can leave their child has decreased by that much. The system is not just robbing you, It is stealing your child's inheritance, and while doing so, it is sending you a credit card gift, a cashback campaign, a "You are our valued customer" message. They give with a spoon and take with a bucket, and every step of it is legal on paper. So is it possible to use this system knowingly? Yes, it is. And now I'm going to give you the practical steps because the purpose of this channel is not only to expose the system but also to show you the exit. First, keep your utilization rate below 30%, but you do not have to cut your spending, pay off your card before the statement date, because FICO looks at the balance on the monthly reporting date, and this small timing knowledge has a big impact on your score. Second, do not close your old credit cards. Keep them open even if you do not use them because closing them both shortens your credit history and increases your utilization rate, and that hits you from two directions at once. Third, if you are going to apply for credit, make the same type of applications within a short period of time because FICO counts mortgage and car loan inquiries made within 30 to 45 days as a single inquiry, and this knowledge directly saves you points. Fourth, once a year, pull your free credit report from annualcreditreport.com and check for errors, because according to Consumer Financial Protection Bureau data, 20% of credit reports contain errors, and fixing these errors is completely free. Fifth, and perhaps most importantly, teach your children from an early age how the credit system works. Because financial literacy does not start in a generation, it starts with a decision. And watching this video today is exactly that decision. Now take note of these 5 steps and write in the comments which step you are going to apply first because I genuinely want to know the answer to that question and I read every single comment. In conclusion, let me say this. We cannot change this system, but we can understand it and use it in our favor. The credit score system was not designed for you. It was not designed with your children's future in mind. It was not designed for the well-being of society. It was designed to maximize the profits of a few companies, and they do not even have to disclose this to the public because the system is legal. But this is exactly where knowledge comes in because in any system where knowing the rules gives you an advantage, the most powerful weapon is awareness, and today you gain that awareness. Like this video, subscribe to our channel, and turn on the bell because every week we tell you what has not been told. And it is not the algorithm but you who decides whether this content reaches more people. Share this video especially with anyone who has children, who is thinking about buying a home, or who looks at their credit card bill every month and asks, "Why am I always in the same place?" Because the answer is in this video and this information is free, but its value is enormous. Finally, I am asking you 3 questions and I want you to write the answers to all 3 in the comments. What is your credit score and do you track it regularly? What was the most striking thing you learned in this video that you did not know before? And which financial system do you want us to expose in the next video? I read every comment because this channel is not a broadcast but a conversation. I want to hear your voice, and in the next video I am keeping my 401k promise. I will show you step by step the mathematical power of employer matching and how to choose the right fund in your 401k menu. See you in the next one.